Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Thursday. It's January the 5th, 2012. We saw a little more move to the upside here in the U.S. markets. Looking at the NASDAQ to start off with the day. We've got 4 different major market charts to look at for you today, and we'll do all of them. We'll recap everything on Friday so that you're ready for the week ahead. Okay, we're looking at the NASDAQ today, and you'll see that we've now reached our target. Whenever we give a buy signal, previous high is the target, and that's what you've reached now. So that would be complete. If you expect this to keep moving higher, which it can do, you should take your stop and advance it, and then just follow that stop higher. As long as it keeps making higher highs and higher lows, you can do that. For those of you who are already out, I would just sit back and wait. You'll notice that, like I said, you could go higher. You can do that because you're not actually in the overbought position according to the ultimate oscillator here. You'll notice whenever you get up above the 80 line there, then you get to that overbought condition. You're not actually quite there yet. You're at 68 and change, so keep an eye on that. I mean, sorry, that was 70, not 80. Okay, now let's have a look here at oil, and you'll notice that we're getting overbought condition on the ultimate oscillator here and here. And that's why we're getting these sell signals right here. Whenever the price reverses, we have those conditions, and you'll get those little sell arrows there telling you the trend is trying to reverse to the downside, from the uptrend to the downside. In this particular case, it's also forming a bearish divergence where you have the high points here and here are trending up. However, the corresponding high points on the ultimate oscillator here and here are actually trending down. That's a bearish divergence telling you to look for a breakdown. So that's something else to be looking there. I wouldn't be a buyer in this particular asset right now. For those of you who might have traded on the long side, back there in this time reversal situation here, that would have been your target. You would already be long gone. Now let's have a look at the Russell 2000 Small Cap Index here in the U.S. Most recent signal of the trend was here, but we told you on all the U.S. charts, we saw that one set up because it was the overbought condition of the ultimate oscillator, the sell signal, the reversal of price. But we told you we would not take that trade because multiple reasons, but the number one being that we didn't think it was actually going to sell off again. We thought it would move sideways before it taking the move higher, and that's exactly what's going on here. You've been moving sideways here. In this particular chart, you pierced the resistance line here and then pull back down. Now you move back up to it. We expect this will continue to be this case, and you will get a breakout to the upside and challenge the previous high way over here. That's what we see right there on that chart. So I would not be selling this at this time. If you get a rally up here and you start to form a bearish divergence or something of that nature, telling us that the rally is going to be short-lived and something like that, we may get a better sell opportunity. So that's why we actually are passing on this one that we see on this chart. Last but not least for today, the same old SPX we're looking at here, the S&P 500 Large Cap Index. The same scenario right here. We had a sell signal on the chart because of the trend reversal here, but we told you the same thing. Do not, we wouldn't short this particular situation. We expected it to break to the upside. That's exactly what's going on. However, like I was mentioning a moment ago, where your uptrend, that breakout may be short-lived. That may be the case here. We may be just being in a January effect scenario. The reason why I'm starting to see this is because, again, note this high point here on the ultimate oscillator. Note this lower one here. All right, you're trending down here. However, corresponding highs on price activity here and now here is still trending up. This is a bearish divergence. Now remember, these can show up well in advance of any actual sell-off. So don't just look at a bearish divergence and go, hey, short it all. It doesn't really work like that. You'll be under a lot of pressure for a long time. And not every bearish divergence or bullish divergence, and every divergence for that matter, would actually be effective. So right now we're just watching it. We're seeing that it's a very weak breakout to the upside. We got that much at least figured out. Okay, so let's keep an eye on it. I'm actually still long the SPY. Have been for a while. That's I'm going to close that pretty soon, but I'm watching this for a potential reversal to the downside. But it's just not here yet. Even though these charts will show every time a reversal happens after we get overbought or we get oversold, these charts will mark every single time that happens. And we keep those charts updated every single day on our free website at PerfectStockAlert.com right there, which is currently under construction. But it'll be up shortly this particular month. So even though there's a mark on there, you've got to take a little bit further than that. You've got to analyze overall chart patterns and different things like that, the trends and stuff, to actually determine which ones you want to use. And in this particular case, we're not a fan of selling right now, but we're thinking about it very strongly. We just want the right opportunity, okay? For those of you who may be wondering when's it going to be time to actually start the selling process, well, you wait for price to confirm whatever you think you're seeing. Right now we're seeing a bearish divergence, which I've already shown you, in high points here and higher high here. Remember to use the close to do that analysis, okay? Here and here. Alright, so you've got this downtrend here and an uptrend here. It's a bearish divergence telling you this thing is not likely to be sustainable because momentum is not really there behind it. So that's something we want to look at, but we want to take it a step further and wait for the timing to be right. So wait for price to begin to break down. Right now that's not happening. We're still getting higher highs, higher lows, higher closes, things of that nature. So we want to keep with it as long as it wants to do that. But when that reversal comes, we will be there with our pitchforks and our torches and all that stuff. Right now, watch those low points here. You've got a low here, and then we got to break out to new high, and now we've got a low point here today. Let's see if we get a break out to new high. If we do, we can just draw a line right here out this low. As long as she keeps making higher highs and higher lows, we'll stay with it. But as soon as she takes out those lows, or at least one of them, we'll have some sign that we're starting to break down. But until that happens, just stay with it. For those of you who traded the long side from this point here, if you traded there, your target was there, you are done already. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.